Good morning, Lita. This is a video that I said I would make for you regarding your question of your proposed Iron Condor on Caterpillar. So, Iron Condor, you're wanting to sell an out-of-the-money bear call spread, out-of-the-money bull put spread. Let's take a look at, and everything starts with the charts. So it had a big wide range up here for a couple months, February, to June before the breakdown. And now it's in another sideways trading range. You got two lower highs here, so that would be your proper reference point for selling the out of the money call spread. And you got all this horizontal support here. If I were to go down to an hourly chart, all of the support with this shakeout and deep retracement. So I'm really more focused on the horizontal support on an hourly chart, so the 135 area makes sense. Now let's go to the particular expiration that you're looking at, which is September 14th, 9 days to expiration. This is the one that you are asking me about. And let me raise this for you. There, you can see the whole thing. So you're suggesting a 144, 148 bear call spread, 132, 128, and this is what's loaded up as the current midpoint based upon the closing prices of 56 cents. And my opinion on that, 9 days to expiration, $4 wide, is it looks fine. It's in a sideways range, and that's where we do iron condors. Even though we leg into them many times, there are patterns like this where it makes sense to. It's a neutral time decay strategy where we're just trying to collect this 56 cents a share of time decay, provided Caterpillar stays in a sideways range and doesn't violate your suggested strikes. Now, you also asked me how do we go about picking the spread width. And there's a little bit of just art to it, but I look at the quotes and I see how much I'm giving up to buy the further out of the money option. So let's take a look at it here. You're doing the 144 calls, so that's the one you sold, 40 by 45, and then you're doing the 148. So there's the call spread side. You're getting 30 cents. If you went out another dollar, it looks like you're only going to get, 12 to 9 is 3 cents. If you went lower, 15, then you can eyeball it like I'm doing, or just plug in the actual number. Let the computer calculate it for you. So that just dropped 4 cents to save another dollar narrower of spread width. And you know the analysis, and you calculate the credit you're getting divided by the maximum loss, and the narrower you get, the maximum loss is less, but then your net credit is less, of course. But so that helps. You got to calculate your return on equity. So this one, for example, $3 wide, 26. You take 26 cents divided by $2.74. That's your return on capital. You can even experiment and go $2 wide. You're only getting 20 cents. So that's 20 divided by $1.80 is your return on capital there. And that's how I decide how confident I am on the pattern. If I think there's any big gap risk, or if I'm, if the pattern fails, I'm just going to stop out anyway. And I just determine how much I don't want, how much credit I want to receive. So now let me actually go the other way. 144 to 149 is $5 wide, and I'm only getting another 3 cents for an extra $1 of spread width. So I like your $4 wide, and I do the same thing on the put side. So you did the 132, so 37 by 43, but the narrower the better, without giving up too much of the credit, and that's the magic of it. Finally, let's take a look at your stops, because you were asking me that. You were saying the question of your stop is going to be a dime over the high of this one, so that's totally fine. And then you asked about the stop on the bottom side was a little more vague. You said you were going to use 132.58, which is kind of right here in no man's land, so I'm not quite sure where you came up with that one. But, you know, here's all your horizontal support. Here's your, this is an hourly chart. Here's your shakeout here. But here's your horizontal support. Here's your higher pivot support, higher pivot support. Here's a pre-market pivot from this bullish gap up. So I would say, you know, so this is 133.23-ish. Even if you give it a little bit more, I would say somewhere around 133, because otherwise that's going to be a deep retracement, and then that means all this horizontal support failed. So there you have it. Hope that helps. Good trading, and see you in the green trading room.